Welcome, everybody. I'm going to assume for this that everybody has done some sort of training in technical analysis. And then, so all I'm going to do here in the short period is just give you 10, 12 hot tips as to what you can do in terms of growing a small account. So we'll go to some live trades in a minute. And we'll talk about the what's going on in the markets right now a little bit later on. But let's just start by talking about how to concentrate on your small account. So on the basis that if you have gone through some sort of beginner's program and you understand the basics of technical trading, then listen up. If not, that's something you need to source. You can talk to us about that if you want to learn to trade with us. So once you've learned trading, one of the first things you need to do is to gain live experience. I suggest you have a demo account, open a demo account, and also while you're doing this, while you've got your demo account and you're using it, have a journal. Make a note of why you took a trade, where your stop was, where your target was, and what checklist you used at the point in which you entered that trade. Because if you then have a losing trade in your demo account, then you've got a record of what's happened. Now, you can go back and find out if you made a mistake, or you can go back and find out if the market just simply went against you. And so by gaining that experience of trading and having a journal, then you are well on the way to really getting to grips with your trading and your account. The key aspects of trading a small account is that you haven't got much margin for error. If you get into your live account and you've funded your account and you start to chip away at that, the very nature of a small account means you've not got long to prove yourself as a trader. So when you do go into trading, when you do start to use your live account, you've got to trade very small size. This is after you've done a demo account and proved yourself on a demo account. When you go live, trade small size, really small size. Trade very infrequently, but make absolutely sure you know why, where, and when to enter a trade. Because if you don't do the boring bits, if you don't do the hard graft, if you don't sort this out before you activate your live account, you're going to blow it in no time. These markets will just eat you alive. They'll have you for breakfast. So, you've got to get that demo experience. You've got to have the journal done, see how you're performing, assess yourself. If you've not got a mentor, assess yourself. This is a problem I had with my trading. When I first started going day trading, I overtraded, simple as that, and I blew an account in next to no time. Most people do that. Some people undertrade, some people have problems pressing the button. I had the opposite. I had the most common problem, and that I just simply traded too many times. There is no point. If you're scalping and you make a profit scalping, then fine, do it. But there's no point just going, taking a trade, just doing, 5, 10, maybe even 15 trades a day. What's the point? What I'm trying to do is I'm just trying to get, measure the market, see how we open, and then take a trade if it's if the support is holding, or sell if we are in a downtrend and the resistance is selling. Define your rules. If you've done the beginner's course, if you've done some training in trading, make absolutely sure you have a checklist and you have defined your risk management rules. This is the boring stuff that's going to make the difference between success and failure. That's why so many people fail, because they don't do the boring stuff. Whenever I set up any training courses, the boring courses are really, really tough to get people to come along to, and yet they're the most important. And that's why so many people fail. So if you define your risk and you're clear about what your risk is, then you can slowly build your account. And at some stage in the future, once your account is growing, then you can revisit your risk management rules and look to see if you can increase your position size. But delay that in the early stages until you have clear data that you can do this, because way too many people will adjust their position size, etc. The risk management goes out the window. They haven't got any risk management and they wonder why they're blowing their account. Trade high probability setups. So obviously you need very specific setups to go in and out of this market, and if you haven't got any, then you need to learn them. So there's two ways of doing it. You either pay for a course or you spend many hours developing a trade setup that you can backtest and you know is a high probability trade. A high probability trades, go back to what I said earlier, when it is where you can tick more boxes than you can't tick, where you've got evidence from your own checklist that is a viable trade at the point in which you enter. And point 5 comes increase your risk. Increase your risk only when your account says you can. Let your account tell you that you're ready to increase your position size. In other words, if it's not growing, forget it. Stay very small. If it is growing, wait until it's grown. Don't suddenly leap up in a position size, because that just changes the whole game. A large part of trading, if not the biggest part of trading, is the mindset. If you're busy ramping up your position size too quickly, then you will knock yourself off course. Let your winning trades run. If you could take a trade and you've got 20, 30, whatever pips profit, if that's your target, then of course take it off. But if you have a 50 pip or 100 pip or whatever target, stick to it. Because if you constantly tamper with your trades, get you to stop too close and don't get a runner, you're never going to build your account. You don't. There are some people have got trading plans that don't demand runners, but most of us do. Most of us need runners to put some decent money in our accounts. Cut your losing trades. You hear that all the time, and that's the first thing you learn. If you've got a losing trade, get out of it. But there are, in the early days, you might be tempted to increase your stop. You might be tempted to let it run when it's going against you. Just don't. Just get rid of it and rethink it. Go back and look at the reasons why you took that trade. Did it meet all the criteria? Did you make a mistake? I make a mistake once or twice a week. On a really bad week, I might make a mistake once a day. I haven't done that for quite a while. But in the early days, you've got to make mistakes. Simple as that. So be aware of it. Be conscious of this. Take control of your trading. That's what I'm trying to say here. The underlying message of this quick, short webinar is to take control of your trading. Once you have gone into trading with the intention of winning, of building your account, then you've got a good starting life in your trading journey. So stay on the trend as long as possible, and stay on the right side of a trade. We'll talk about staying on the right side of a trade in a minute. I'll get off these slides and we'll look at the live charts in a minute. So do your homework. Do the preparation, prepare your mind, prepare your charts, and put the work in. Exit strategy. If you've done all the work to get in a trade, be very clear about what you want out of that trade, because again, this is one of my early mistakes. Spent so long prepping and looking at the reason for getting in a trade, I used to forget how to get out of the trade. I used to forget what I actually needed from that trade. So in a minute, we'll go to live charts and have a look at what the kind of trades I've done today. Any questions from you YouTube watchers, then punch them in the YouTube channel and I'll pick them up. So the final point before I go on to live trades is, there is going to hopefully be a point where you will need to adjust your risk levels. So if you've stuck to your rules, if you've grown your account, you've identified where your strengths are, you've got trade setups that suit your trading style and you have discovered are high probability, then at that point you are in a position where you can allow yourself to increase your position size. It's always good to actually set that in stone in a trading plan. That's something I've not mentioned. You need all of this that I've talked about. It should be a real core part of your trading plan. And the best trading plans are those that are written on one side of an A4 sheet, not those that just go on and on with all sorts of irrelevant detail. They'll be short, precise, and actionable, and usable, functional. Right, let's come out of these slides. Let's take a look at what is going on in the market. So I've been doing a lot of gold trading recently. So I've got the gold chart in front of me. So why do I like the gold so much? Well, let's just come into this one step at a time. This is the weekly chart in gold. If you add the 20-day moving average, you will see that not only are all dips bought in gold, but we are currently well and truly above the 20-day average. I think at the moment we are consolidating. We had this big push up on the week beginning the 13th. So at the moment we are moving sideways as this average has got a little bit stretched. So if we dip a little bit harder, maybe, sometimes these consolidation periods need a deeper dip. 1900 will be the obvious place to get in, but 1970 at the moment. But I'm still buying these support levels, even these short levels here. I'll show you some trades I've done earlier on today. We've had a significant 1, 2, 3-way level into this 2000 mark. 2000 is an obvious problem for gold. But if we can pull back and have a decent run at it, I think we can crack it and ultimately go to 2100, 222, and up there at 2425. All right, so this could be this looks like a very decent impulsive wave 1, shallow pullback. We could still be in leg 3, in wave 3. So wave 3 alone, if this is really bullish, could take us up to 2100. Anyway, the bottom line is I like gold. I'm a gold bug. I'm buying pullbacks, and I'm looking for this to complete this consolidation and break out of this high and push higher. Okay, so let's look at a quick look at the daily. We'll talk about indices in a minute. So here's the daily chart with all my analysis on it. We are at breakdown area from April last year. And you can see how I've got a trend line suggesting so if we drop all the way back to 1920, 1925, that would reconnect us with this daily 20 average and this trend line support we've got here. In the meantime, I am buying dips. I have a longer term position on this, and I'm also buying miners. All right, so from this, let's just speed this up a bit. So here's a 3-hour chart. It doesn't really matter what time frame you use. I do like the 1-hour chart, but I've got it set up in to my system, and I'm not going to reveal that system in this situation. Okay, so you can see from this 3-hour chart, these dips are getting bought. Ever since we had this run, big move up in the late February, early March, big move up in the early part of March, and every subsequent dip is getting bought. But at the moment we're channeling and consolidating. So I'm still buying dips, and that's what is happening with that one. And if you drill down into a smaller time frame, let's look at a 10-minute chart. If you're day trading it, this is a good time frame to be looking at, and just grinding higher today. It's not moving higher at any speed. If we look at the 2 o'clock open, 2 o'clock UK time, where is that? That's here. That's when New York tends to come in. So you can see this 1960 got bought. We had a big push through 1965, and we're currently just trying to break through 1970. This is sort of a basic principle of my trade setup. I look to see how the market opens in New York, and then if the pullbacks are still getting bought, then I'm going to follow that pullback. Okay, we have a quick look at the Dow. You can see that this was the opening bar here. And so we popped up into last night's level, kept selling at this 32.5, 32,550, and we're coming back down to support with 2 3/4 hours left until the US closes. So if we drop down here at 33,350 and hold, we might end up going back to the highs again. In the meantime, you can see we've got lower highs, the volume's really tailing off, and we look lower. So in actual fact, if you look at the daily on this one, you'll note that we are under the main moving averages. There's the weekly. Yeah, so we're actually under the 20-day average on here. So highs are definitely shortable. Any market that can't close above the 20-day average, this is a weekly on the Dow, is a market that is potentially to be shorted. So you can see we had a big red bar week beginning the 6th, and as we draw towards the end of March, this is not holding. And last week 750, 775 was rejected, and we're pretty flat for the week. We're well into the second trading day of the week, and we're pretty flat for the week. All right, so let's just recap then. Let's pull this back. Day trading and growing a small account is about having a plan, having the right trade setups that you know work and a good probability, having a set of rules that you stick to, rules that you've either learnt from a program or developed yourself, and controlling your trading. Having a journal, being quite, assess yourself all the way along. Do the boring stuff. If you do the boring stuff, then you can make a profit out of trading. And once you start to grow your account, and your account is getting significantly better, I'm talking about 20, 30, 40, 50%, not 1 or 2 or 3%. You really got to see some significant growth in that account, and then you can adjust your position size. All right. Thank you for listening. I'm going to be talking about trade setups next Tuesday, so please join me next Tuesday. In the meantime, have a good evening, and thank you very much for joining me.